Hello and welcome to the Stock Planner channel. Today I would like to talk about some infrastructure plays, particularly just one play in copper. Since the Biden administration, he's been trying to put through an infrastructure plan through Congress. This will require all our shipping ports and our railways, the ways we fuel our trucks and cars. All that is going to change, and the United States is putting money into it. We might even have a high-speed train crossing our country, just like in China. I've been told that our ports are very inefficient. We need to be putting money into them. These container ships are coming from China, one after another, and they're going back empty. The Biden infrastructure package will fuel many construction projects and road projects throughout our country. It's inevitable we'll be pumping money into the economy via infrastructure. Inevitably, copper use will increase because it's used in building every project, especially electricity. It works best. It's used in plumbing and electrical, and also wind. FCX is one of the largest copper miners out there, and that's what we're going to concentrate on today, FCX. Even if we go to EV and solar, they're going to use a lot of copper. And electric cars use 4 times as much copper as a standard car. So I think that FCX is well positioned for the future. Looking at FinViz, this is a chart, and you can see generally FCX has been going up. Since about mid-May though, it has been dropping, and now we see its little pop. FinViz has a target of 43.64, which puts it up around here. It was just at about as high. This company is profitable and has a forward PE of 10.42. It has a buy recommendation, and it's optional and shortable. However, in June it was downgraded to a neutral. It's not one of your fast-paced stocks, and it's kind of boring. Kippinger has some easy-to-read articles out there, and they have some categories that are very useful for novices and smart people like me that can't read too well. And this article is 14 best infrastructure stocks for Biden's big building spend. And he lists them here very easily. Vulcan Materials. It's a stock that I have on my list. In fact, I use them to deliver material to my house and business. Anyway, they list Freeport McMoRAN FCX as one of their stocks that would profit from the Biden infrastructure plan. Copper. In this article is where I borrowed some of the thoughts from Kippinger as my introduction. It pointed me in the right direction. These articles can point you in the right direction as well. Very good and very easy to read. It's a short little article, and it has the next one, Brookfield Infrastructure. Lots of great articles. Well, let's get back to FCX. TipRanks is another tool you can use when you do your due diligence. It says it's currently trading at 37, going to 45, 44.5. Moderate buy. Gives it a 9 ranking. That's really, really good. Hedge fund activity has decreased. We'd like to see it increase. All these things look very, very good. Return on equity, 18%. There's the chart again. And the next earnings date is July 26th. About a full month. This company is based in Arizona and was formed in 1987. And it has mining operations in North and South America. Swinging over to Simply Wall Street. This is not a free package, but very, very reasonable. And this is Snowflake, and you're trying to find a snowflake where this is filled up with solid green. This is not so green. It's trading 57% below its fair market value according to their calculation. Earnings are forecast to decline over the next few years. All mining companies have debt, and it just became profitable this year, so it's a fairly new company. They say the fair market value of this stock is $86, 87, trading at 37. So that's good. I always like to find stocks, especially if I'm buying, that are undervalued, significantly below fair market value. And here's your growth, your forward years, and then it starts declining. Annual earning growth of 61%. Very good. That's pointing upward. But I'm only interested in this for the next 45 days or so. Maybe only 2 weeks. This is TradingView. It's a free package out there. You get up to 3 indicators. I have 4 here. And looking at this, the objective of a swing trader is to catch these swings, catch the peaks and valleys like that, or even the minor ones, and you try to find indicators that do that just predict that downward trend. Well, it did. Stochastics, these all have predicted that drop. So currently, the MACD is saying it's going up. The stochastic RSI says it might be overbought and might be going down. And the RSI is just in the middle here, flopping around. What we really like is to have the RSI go below the 30 and come back around. The last few days, it's just been, the price has been just flopping around. Zooming out a bit, showing the Fibonacci. This is what I like about the zigzag up here. It's a perfect indicator, but it's only perfect because it looks into the future, so you can't really use this to trade on, but you can use it to draw your fibs. It shows perfectly where your top and bottom was on your major zigzag. And then you have to ask yourself, is it going down here first, or is it going up this way first? Looking for the 50% retracement, we find it right here. Let me zoom out just a little bit more. A lot of people look for that 50% retracement. In other words, when you have a zig, it says it retrace to the 50% and then maybe turn around and continue on its downward trend. So I believe in the 50% retracement, maybe not going down, maybe it'll just cross that and continue on up, but I believe this thing is going to 40 before it goes down to 34. I believe this is going to hit this one before it hits this one. But my indicators, this is the RSI stochastics, and this is the RSI. I usually want to wait for the RSI to come back around, and I'm a little anxious about this trade. So what do? I want to get in. I want to get in long. If I bought this at 37 and sold it at 40, that's $3. That's a good profit. But if I didn't want to wait and wanted to buy this at 35, how do I do that? And to do that, I could sell a put, and as long as it stays above the 35 for the next 2 weeks, I will receive $52. And I believe I need around $600 to do this trade. Let's just take a look at the numbers here. But this is what I get by selling a 35 put, which says, hey, as long as it stays above 35, you won. What happens if it goes below 35? Well, then I buy the stock at 35, which is what I wanted to do anyway. So, and I waited around it and got $52. So in this case, I did not buy the stock. I sold a put. Let's look at this a little further. The broker I use is Interactive Broker, and I could do as a screener, and it gives me some of my options that I could do for a credit. And one of those was to sell a 35 short put for a $51 profit. If it goes to zero, I would lose $3,000, which is basically what it is, what would cost me to buy the stock back. Okay, to buy the stock, buy 100 shares of this stock. So if you didn't really lose it, you still own the stock. It's not a loss. But that's what it would cost me if it goes below 35. Not a bad deal. And here's how it looks. 35 put, $52 credit, and the margin impact was $600, $590. I submitted the order. There's a nice little chart here that shows you where it's going to go. There's 35 down here, and this is the probability curve. I executed the order. It sold it. I put $52 in my bank account, and it cost me $1 in commission. It ends on July 16th. This is June 30th. So in 16 days, counting the weekends, I will either keep the $52, exit early, which I can always get out early, or buy the stock 100 shares at $35 a share. Going here first or going here first? What do you think? Please make your comments below. Should have I waited to the RSI, came around below the 30 and came back around, and then did my thing, which would have put it down to about here, and then bought or sold my option? Yes, but I was anxious. This gives me an opportunity to get in now, and if it does go down a little bit, I hope it doesn't get to 34, because then I will lose. But this is how I do my trading. Options do save you some money. You can make some money with options if you use them right, and you have to want to own this stock, which I do for the future. I believe it's undervalued. I believe people discover that it's undervalued and that it will rise. And I do think this is a $60 or $70 stock over the next 2 years. But its profit will be a slow mover. materials are. Anyway, let me know what you think about this trade. I'm not your financial advisor. All I can do is just show you what I do and how I do my due diligence and how I make my trades. Hopefully it'll help you learn. Please like and subscribe. I could use the views on my channel. Catch you on the flip.